Welcome back. It's a Tuesday morning here on Squawk Box Asia. This is the kind of lead that Asian markets have today. Fairly decent. We had all three major indices finishing in the money, creeping up there. The Dow, notice this, finished above 11,000. The first time it's done that since back in September of 2008 here. What's going on, though, is even though we had a lot of, very good momentum come the end of March, starting to taper off now. A bit of caution creeping ahead of this reporting season in the U.S. And talking about that, we had Alcoa first out of the gates. The numbers a little bit mixed. Let's get to Yu-Dee Chang, Principal and Chief Advisor at ACE Investment Strategist. He joins us now live from Washington, D.C. Yu-Dee, of course, we've got President Obama and WHO meeting, so security is tight where you are in D.C. We'll get to that in just a bit. But talk to us about the Alcoa earnings. What do they tell you about what kind of shape corporates are in?
Well, this is the first of the kickoff of earnings season. I think before that, it's kind of interesting. Usually in the U.S., before the earnings season is the earnings warning season. We pretty much passed that already. Nobody really came out and warned us about anything. So right now, the trader and the market is expecting pretty much on expectations as far as earnings are concerned. Alcoa came out pretty much on expectations. They actually lost 20 cents. That's before the one-time write-off. So afterwards, I'm sorry, that's after a one-time write-off. So before, I think they made about 10 cents. Expectations about 12 cents. So nothing there. I think what's slightly good coming out is the fact that CFO or CEO came out and said that, well, they do see a little bit of visibility going forward in their business.
Interesting stuff. You know, last quarter what we had was a lot of beats. I mean, companies did pretty well at the bottom line, yet the market sold off. I guess it was a classic, you know, buying the rumor, sell on the fact. Are we going to see something similar this time around as well?
Yeah, I think there's a possibility. I think on the very short-term basis, you know, you look at the U.S. market, the bottom was made back in March of 2009. And from there, before this leg up, so we had about 7 correction with pullbacks in about 12 months. Every 7.5 weeks, market tends to pull back, minimally 4%, maximally 9.5%. It's been about 9 weeks since we had a meaningful pullback. So maybe the traders or investors will use this opportunity to take some profit and sell the market off a little bit. So it's a possibility. However, intermediate term basis, follow the trend. The trend is your friend, so the market is probably still going to head higher.
The old adage, Yu-Dee, this earnings season is no different to any other, and that many investors are also forecast. But how confident can we be? Do we really expect companies at this point in time to say it is smooth sailing from this point onwards?
Yeah, you know, that's a fantastic question. If you look at earnings, right now they're expecting about, on the S&P 500 basis, about $80. So S&P is trading at 1196. 80 divided into that, that's about a 15 PE. So in order for the U.S. market to continuously to go higher, we really need to have a little bit more spectacular earnings than what we're having right now, because most of the up has been already anticipated in the market. So I agree with you on that. As far as are we really going to get good visibility, good earnings, I think the market does climb the wall of worries without any surprises. I think the earnings is going to be okay.
Yu-Dee, what sort of metrics are you looking at in terms of earnings season? Because with Alcoa, we did see growth on the top line. That was encouraging, but the market wanted an even stronger figure. Are you watching revenue? Are you watching capital management outlook statements?
Yeah, you know, both. I think I'm watching revenue. You hit it right on the head, sorry, and also outlook. I think both. Revenue is very important. Like you were saying, Alcoa did a lot of cost cutting and production cutting for that matter, and that's why it was okay on its earnings. I think finally, if you look at this earnings reporting, it showed a little bit of increase of revenue. That's very positive. So looking at revenue growth as well as its outlook with visibility going forward is what I'm personally looking for.
Okay, listen, Yu-Dee, we'll get back to you for a lot more coming up just a bit. Yu-Dee Chang there from ACE Investment Strategists over in D.C., Karen.